The following was created for Accounting Business Decisions A. What is petty cash? Petty cash, also referred to as a petty cash fund, is an amount of cash which is kept on the premise in order to pay for minor expenditures. The amount of cash kept in the fund is often small, however, this is ultimately dependent on the size of the company or organisation, and said company or organisation's needs. An example use of the petty cash fund is paying for fresh barista-made coffee for an early morning meeting, as I'm sure we'd all need a cup of strong, fresh coffee to begin the day. The petty cash fund is kept by a responsible person, which is called the petty cash custodian. 3 activities make up the petty cash fund's operations. These include establishing the fund, making the payment from the fund, for example, making small payments and from employees seeking reimbursement, and replenishing the fund, i.e. putting money back into the petty cash fund, and please note this is when journal entries are made. Cash must be replenished by counting remaining cash in fund and cashing a cheque. As we're in Australia, think about the last time you took out a chequebook. I'm sure it was a memorable experience. Here we can see in the Petty Cash Fund Replenishment Report that the cash requested to replenish funds and total receipts were both $85. When is the petty cash entry made to the journal? Cash to replenish the petty cash fund is not requested as soon as the payment from the fund is made. Instead, cash is requested when the petty cash fund is low, and it is then that the responsible person, i.e. the petty cash custodian, requests for funds to be replenished. Cash short and over is actually an income statement account, in which records of shortages or overages in cash are made. An example of when cash short and over is used is at a bank, in which a bank clerk records any differences between the expected amount of cash based on the likes of deposits received and checks, and the actual cash standing at the end of a business day. However, in the case of a petty cash fund, cash short and over is used to record differences, which are uncovered when replenishing an organisation or company's petty cash, similarly to the way the bank clerk would offset the difference between the expected cash and actual cash at the end of the day. A simple way of remembering this is that a cash short and over account is temporary and can have either a debit or credit balance. In this petty cash fund replenishment report, we can see that the cash requested to replenish the fund was $87 and the total receipts were $85. This is a difference of $2. The following shows the debits and credits as of the 31st of May, including the cash short and over account. Thank you, and I hope this was insightful.